Happy Friday, everyone. It is 8:03 a.m. Chicago time, 9:03 Eastern on Friday, the 22nd of December, 2017. I want to first of all wish everyone a happy holiday and a Merry Christmas if you celebrate it. And of course, a happy, healthy, prosperous, productive 2018 and beyond to everyone. I want to thank everyone and give you gratitude and show my gratitude for your interaction with me, with the fact that you show up at these Trader Bites and just emailing and really working hard on improving yourself and improving me through your questions and interaction. I found that I learned a lot when I was starting to trade. And I learned a lot from others, big traders that were around me at the various prop shops and things that I was involved in when I came into trading. And I was never a lone online trader. I was always in a shop of some sort, either someone else's or mine. And what I came to realize when I came online and out of the shadows, out of the dark dungeon that I was trading out of, in the Chicago Board of Trade building, is that I've learned a lot more by having to answer a lot of questions. I'm a huge student of the markets, and they've been challenging, that's for sure, and they'll continue to be challenging, but that's how we earn. If it's easy, then there is no edge. It's a competition. I think that there will be a lot of changes next year. My focus is shifting after the beginning of the year towards trader development, and that's going to be a good thing. It's where I wanted to start. That's where I'm returning. So your continued support is definitely appreciated. I'll keep making announcements and so forth as the year starts out, and hopefully will make a difference next year. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market this morning looks to be holding sideways. The S&P is up 2 ticks. Most of the other indices are lower. The Dow is down 14, the Russell's down 1.4, the Nasdaq's down 2.75 from yesterday's close or settlement. The Treasuries are down 1.5 ticks. The beating and the bloodshed this morning is occurring in Bitcoin and cryptos. That sector is red across the board except for a few forks here and there, crypto forks that are remaining green. But we're looking at about, in the futures, CBOE Bitcoin is down 20% overnight. The volume's still relatively light, but picking up 6,200 contracts. I'm starting to see in that product, I'm starting to see some structure and a potential edge. I'm seeing the same order flow mechanics that I've seen for the last 17 years of trading, and I'm seeing a slight possibility for an edge here in the sell-off. Of course, sell-offs are always easier to read, in my opinion. But overall, Bitcoin is getting pummeled. It's down to right now. It's trading the GDAX Bitcoin is trading at it's down 30%, 31%. Currently in the cash. GDAX Bitcoin is trading at $11,330. If you recall, just a few days ago, it was trading at $19,870-ish or $19,840. So it's down quite a bit from a few days ago, about 40% or so, give or take. So this is definitely a strong move. I had an interaction with a couple people, a couple followers on Twitter about Bitcoin and that flash crash that happened the other day. And I posted an image of a heat map of what that crash looked like. And I had indicated that we're very much likely, because it swept down to 14,000, and then it ripped immediately within a few minutes back up to about 16.8, and then it went to 17.4 where it started. And I had indicated to someone or whoever was following that conversation that 14,000 is in the cards over the next few days. And that's not just a guess, and I'm not boasting. It's just my observation, having really intensely looked at this thing for the last couple months, and really keeping an eye on cryptos since about March or February as a result of nothing other than a podcast that I listened to. And what I've noticed over the last couple months is it's just an auction. It's just an auction. Sometimes it's irrational. Or not irrational, but it behaves like a mania. But overall, it is an auction, and the way it auctioned back up that low did not look to me like it was done. There was a tremendous amount of volume that happened on that crash. You can find that tweet in my stream on twitter.com/futurestrader71. But very interesting to watch, and it's really important. Like when I came into trading and I started to trade the DAX and the Russell and things like that, it's really important to just watch and just very deliberately observe how the auction rotates. Anyway, I'm dwelling on that topic. I'll move on. Today I won't cover much news, but yesterday we had a sell-off into the close. Yesterday, Hypo 1 worked almost perfectly. It dipped down a little bit deeper than I expected. I had indicated to those who are in the S5 chat room that we're finding a base around that 86 area to be cautious of short, and we ended up fulfilling Hypo 1 almost perfectly. And then we sold off in the afternoon. And as far as the sell-off in the afternoon, there is some geopolitical news with Spain. There was a Catalan vote, and it looks like the separatists took a majority in the government, a very, very slight majority, a majority nonetheless. And it's unsettling for the European markets. The DAX is down 0.23 currently. The Euro stock's down 0.53%. And that's weighing in a little bit. But other than that, it's a typical day. We had some releases this morning: personal income, PCE core, and durable goods. Ahead of us, we're looking for University of Michigan. This is the final number for December, expecting 97.2, not expecting this to be a mover. However, new home sales is also coming out for November, expecting 655,000 units. That may give us a blip, but overall fairly quiet. I want to draw your attention to the fact that we're heading into the Christmas holiday on Monday. The markets are open as per usual today in the indices, energies, FX, and treasuries, interest rate products. We'll close at 4 Central. And then we will not reopen until Monday night at 5 o'clock Central instead of Sunday night. The reopen is going to happen Monday night, and everything resumes to normal on Tuesday. I also want to let you know that I will be gone next week. There will be no Trader Bites from today, from after today until January 2nd. So I will not be around. I'll be observing the markets. I'll be tweeting about them. If you're not following on Twitter, don't have a Twitter account, just go to twitter.com/futurestrader71. So I'll be commenting there, but there's no point in doing a broadcast. We have had over the last few years pretty decent moves between Christmas and the Christmas holidays and New Year's. So it's important to observe what's going on next week, I think, if you can. But obviously, if you're just taking some time off, it's probably well deserved. So again, no Trader Bite next week until January 2nd. The other thing I want to I know this is getting long, but the other thing I want to remind you is it's Like Friday. Please hit the like button. It helps me out, so make sure before you take off that you're hitting the like button before leaving the broadcast. Let's do the review for what we had for yesterday. Here we go. So this is the prior review session, a portion of the broadcast. Yesterday we were looking for a dip down into what I showed you as a support area. Remember this rectangle that I posted here between 87 and 86 or so? I can't read it now, but it's about that area where the market had overnight just sat sideways and consolidated before taking off. We see a burst right there. You could see a big green dot right there, and I said that this area is likely to choke up any pullbacks. And so that was set as the area that we're likely to lean against for the big long today. And the primary trade idea of yesterday, if you were here, was a push to what? To 93. We expect 93 to hold us up just a tad, and then we're looking for a push for the ultimate target of 94.50 from about 86, 87. That's the key trade of the day. The secondary trade, and here's where I talked about it actually. There's the support area that I was expecting, and this is right at the trader bite at about 8:17, 8:19 in the morning. My cat's freaking out. I don't know why. It's at 8:17, 8:19 in the morning, and I basically drew out what I envision to be the execution on this particular scenario. And this is very important for you to do as a trader, to not only come up with a plan. Most people don't, believe it or not. Almost everybody I talk to does not, who needs help, who claim that they're reaching out to need help. They are just not doing even this basic thing where we're looking at context and coming up with an idea, several ideas of what the market's likely to do. And then so the next thing is to visualize what the trade is going to look like. So here we have a push up. We're looking for consolidation here. We're looking for consolidation ahead of the 93, a pullback, and a burst up to 94.50. Remember from the prior slide. And this is what we actually got. Here it is. Okay, so this is the open, responsive as expected. Okay, push down. The expected support area was 86 to 87 right here. That's the area I boxed out in the prior slide. Okay, oops, no, this is not it. The review. Okay, that's the area I boxed out. And then we pulled down to 86 and a quarter, 85.75, 85.75. That was the temporary IB. The hour hadn't closed yet, and then we dipped down into 84.75. This is very typical for the market setting up to rotate. You'll see the market just struggling to push lower, not making a real attempt, bids coming in after a while, and then lift off, right? And so this is the impulse I talked about in our plan. There. That's the impulse. That's this impulse right here. Okay. And now we're looking for a push into 92.50. Remember? I'm painstakingly going through this. There's your 92.50. See this box I drew yesterday? Right there. 92.50. Okay. And the reason I'm going through this painstakingly is to connect the conversation with reality, with the actual trade, so that it's not just theory to you. We push to 92.50. See how that consolidation happens? Just underneath 93, the MCLVN. This is from webinar 2 on my site. I also discuss it in webinar 1. And we pull back, and then we push through the LVN So now we're looking for a push into 94.50, and that becomes the key target for the trade. So this trade is 86.50 or so, 86.50 long to 94.50. Pretty good trade, 8 points. The risk on this trade is value low, 82. It's about 4 points of risk, 8 points of reward. Generally, I'm looking for about 1.25 1.25 profit to risk. But this worked out pretty well. And then from there on out, it's anybody's call. That scenario is done. And at that point, once the scenario is done, journal the trade, put it all away, come back, rerun your trader bite kind of analysis again. From that point, what is the context now? What has the market done? What is it trying to do? How good of a job is it doing? What is the most likely rotation from here? Right? Very important. Very important. To keep you in the game, and also very important when you start swinging bigger size. You know, it's not too bad with a 1 lot or 2 lot to go in there and just guess. You know, the damage is $100, a couple $100 on a stop out. But if you're someone who's looking to trade 50, 100, 200, 300 lots in there, you start to get a hard time filling at about 150, 160 contracts anyway. But let's say you're swinging that size, you have to have a much more solid foundation, much stronger foundation, and that's what I've been talking about for the last 8 years publicly. Okay, and so we sell off from here, whatever the reason, and we're back and we're trading at 26.8875 right now, right against the point of control, and so we are back in balance. Okay, so it's anybody's call from here. You see the overnight session, very low volume. The attendance to the trader bites at what, 190, 200 instead of about 400, which has actually dropped from about 800. It's no, you know, folks are just becoming disinterested in the trade as Christmas comes along and the holiday comes along. People take off early and so on. Cheaper flights taken off today than tomorrow and so on. And so it's sitting sideways. 80,000 contracts. That's well below what we would consider to be standard, and we are in that crazy gap zone that we've been stuck in, and we are in balance. So what are we expecting for today? For today, we basically have a situation where the market's just holding steady near highs. Okay, we're not moving away from highs. We have not retested the auction to the downside. We still have the point of control at 94.50. When we look at Bookmap, okay, this is XBT. When we look at Bookmap, fairly thin, lots of offers that have been sitting there all night right up here. Not too heavy, just 700 lots or so, and it's just drift. It's just drift right now. Nothing more to it than just drift. And so this morning's expected to be a quite it's expected to be quite choppy and fairly quiet going into today's trading. Okay, that's the conclusion. Now we can come up with a plan, of course, but I'm expecting it to be choppy. I'm expecting it to attempt to push up, to push down, and then drift upwards later in the session. But overall, I'm not expecting more than about 5 to 7 points today. 5 to 7 points. Okay, and that would be your primary scenario. Just complete balance and sideways. All right. I will leave you there. It's been a long one. Again, I invite you to hit the like button before you head out. And again, I remind you that I am not going to be around after today until the first trading day of the year. And January has generally brought volatility. January has been a very strong month over the last couple of years. So come ready with your tools and everything you need to hopefully take advantage of what the market has to offer. Okay? Good luck. Happy New Year. and make sure you spend a lot of time with family, and make sure you donate before the year turns to show your gratitude for all the good that's in your life. Take care.